This video provides guidance on project part 3. Some of you had not done so well, either because you did not put enough time into doing it at the last minute, or some just truly did not understand how to do project part 3. Therefore, I'm cooking this up really quickly, provide guidance, alright? So what you see on your screen is project part 3, and it's a continuation of part 1 and part 2. Within part 3, there are 3 components. It's called part 8, part 9, and part 10. So this part 8 is the income statement of owner's equity, right here, number 2, and then the balance sheet. So you should know these statements by now. Refer back to chapter 4. Chapter 4 is called Completing the Accounting Cycle, and more so on chapter 6, the merchandising business. Close to the end of each of these chapters, you will see the financial statements, these 3 financial statements. So to assemble this, how do you get the information? Information comes from part 2, which you had completed already. So let's go to part 2 and see the information. Here is project part 2, where you had to do adjusting entries, journal entries, and then using the journal entries, you compile the adjusted trial balance. All right, and you can go back to project part 2 and get the answers. The solutions is available to you by scrolling down right here. Here is the solution that you will see in project part 2. All right, on top is where you did your part 2 adjusted trial balance. You may see X's if you had done it wrong, but the solution with the correct answer will be at the bottom here. So we will use this information, adjusted trial balance, these accounts and the related balances of these accounts. That is the current account balance after completing part 2. So we'll use this information to do part 3. Part 3, here the income statement. So how do you do the income statement? Well, I can't give you the answer, right? You have to look into your book. It starts off with the revenue section and then the expense sections. All right, so here's revenue. You have to select, is it service revenue, sales? It can't be merchandise inventory, right? It can't be advertising expense. That would go somewhere at the bottom of the income statement. So find the information for revenue, and again, that comes from right here. Where's revenue in project part 2? Adjusted trial balance. Sales. Okay, sales would go there, and here's the balance for it. Take this information, copy over to here. Okay, and remember, you have limited check my work, so use it wisely. Here I used it, and you see it's correct. Is there another revenue? Let's see. Sales. I don't see any other revenue account in project part 2, the adjusted trial balance. Look on your book, page 300, for reference to the income statement. Okay, so there is no other sales or revenue account. Then what else would go in line 2 here? Well, refer back to your book. Maybe it's cost of merchandise sold. And then the third line here, what is that? That's a subtotal. Refer back to your book on how to do the income statement if you do not know. And where do you get the balance from? Here, the adjusted trial balance from project part 2. So look for that. Where is cost of merchandise sold and the balance? All right. and then you get to the expenses section. What goes here? It can't be accounts payable because that's on the balance sheet. So mainly, maybe a lot of you struggle because you were not aware to get the balance of these accounts from project part 2. All right, right here, go back to your project part 2 and scroll down. Find this solution. You will use all of these accounts. All of these accounts will go to the financial statements and these balances. So let's continue down here. Here's the statement of owner's equity. How do you do that? Beginning balance. Remember the 5 components of statement of owner's equity, the beginning balance, and then what do you add? Additional, right? Additional capital. Then net income. Well, you have to see what is being asked here. This is definitely the beginning balance, so get that. Where does the beginning balance come from? Go to project part 1. Here it is, project part 1, okay? And what's given in the problem in project part 1 as information that's given, you see, here's the capital account that's given, 685,300, and that's June 1st, 2016. That's the beginning balance, because in project part 3, here we are doing the end of the year financial statement. So it's May 31st, 2017. That's the end of the accounting period. And we start by doing this, showing the beginning balance. So beginning balance of owner's equity, and put the balance here. And as I mentioned, the 3 components, or maybe 4, it depends. It would be additional capital if there's any, and net income. Net income is made up of revenue and expenses, so you would select revenue here. And another component is withdraw, right? Those are the 3 or 4 components depending on what's available. So here, net income, where would that come from? Right here. After you finish this income statement, you have the net income, you carry it down. The net income will be added to the beginning balance. All right, and then that increases owner's equity. But what decreases it? Look at here, and what decreases. And look on page 301, chapter 6, accounting for merchandising businesses. Page 301 for reference to the statement of owner's equity for the format of how to do that. And you would select the account and input the account balance. Where does the account balance come from? Well, I already showed you for this where that came from, right? Project part 1 is given in the information in project part 1. And net income, you know where that come from. Withdraw, where does that come from? Well, what's the latest balance of withdraw? It can't be from part 1, right? Because part 1, we had the beginning balance, and then we had some entries that relate to drawing, and then we get to project part 2. So the latest balance is in project part 2. Here's project part 2 and the solution of the adjusted trial balance. This is the information where mainly what we use to get the balances in the account for the financial statements. So where's the withdraw account on here? I'll leave that to you, and also the balance of the withdraw account. All right, so use that for here. So this is a subtotal, whether it's decrease or increase, and then you have the ending balance here. What is the ending balance of the statements of owner's equity? And that will be a total, grand total of all the lines above. So do the calculation accordingly. Next, you have balance sheet. Balance sheet consists of assets, liabilities, and owner's equity. So you have current assets. Again, refer to chapter 6, page 302 for the balance sheet of a merchandising business. There are financial statements in chapter 4 as well, but those are simple financial statements. In chapter 6, it's for the merchandising business, and it's the multi-step financial statement. So here, current assets, fill these out. Where does that come from? Project Part 2. Right here, find the balances for what are current assets. Then long-term assets, also known as PP&E, property, plant, and equipment. Get those numbers, do the subtotals, and then you have the total assets here. You sum up these two. Then you have current liabilities. What are some current liabilities? Accounts payable. What else? It's easy for you. You can just select from here the current liabilities. But you should be able to get the balances directly from Project Part 2, the adjusted trial balance. I can't say that enough. All right. Then you get to owner's equity. All right, owner's equity, that's the capital account. What's the latest balance of the capital account? Well, we did statement of owner's equity. We have beginning balance and ending balance. There you go. That's the balance for owner's equity right there. And total liabilities and owner's equity. It's a subtotal, or here is the total. That should match the total assets. Total assets equals total liabilities and owner's equity. And that completes your component, the part 8 of Project Part 3. Let's move on to the next. What do you have to do here? This is the closing entries. All right, so you had the adjusted trial balance. We call that Project Part 1. You had journal entries. Well, first you were given accounts and balances, and then you had to do journal entries, and then you do the unadjusted trial balance. So you had account, balances, and then you do some journal entries, and all of that combined, you were able to do the unadjusted trial balance. That's part 1. In part 2, you had to do adjusting entries. So at the end of the period, there were some transactions that were missing, and you need to do some adjusting entries. You need to recognize revenue. You need to see how many supplies were used up, and so you record the expenses that was incurred and so forth. Those are adjusting entries, and that impacts some of the accounts and some of the balances. So you had to redo the trial balance to account for those adjusting entries, and that gets you the adjusted trial balance. That's part 2, adjusted trial balance, and that's what we left off with. Here's part 2. All right, and in part 3, so far we had to do the financial statements. Now we have to do closing entries because we want to prepare for the next accounting period. So we have to close out some entries. Those are, we call, temporary accounts. We have to close out temporary accounts, and those are income statement accounts. And what goes on the income statement? Revenue and expenses. So we have to close those out. Whatever balances those are, we have to offset them and make them 0. So the normal balance of those accounts, so sales, normal, is a credit. And whatever that balance is, now we have to debit that sales account. So sales, and then input the balance of the sales account. Then we have to select all of the expense accounts here. And all of these expense accounts on the adjusted trial balance, the normal balance of those expenses are all debits. You see, all debits. So now we want to credit all of these balances. Select all of these expenses here and credit them, so that way they offset and they will be eventually zero. And the difference between sales and all of the expenses, what is that? That's net income or net loss, right? And we have that difference. We book to an account here. I won't tell you the answer for that. Select the account here. Well, you can always go back into the book, closing entries. I believe that's chapter 4. Chapter 4, is that right? Yes, in chapter 4. Go to page 171 in your book, and you see what account you need to input there. And that account balance will be the difference between the net of all of the accounts above it. All of the account balance above it will go into this account that you have to put here. Okay, that's how you close these sales and these expense accounts. You close it to where? You tell me. And then here you have to close another account into another account. Go to page 171 in your book, chapter 4. So you have these closing entries. It's going to impact these accounts and their balances. So we have to do the last part, which is the post-closing trial balance, meaning that it's these adjusted trial balance, all of these accounts and balances, they may be impacted by the closing entries that you just did. These closing entries. So sales, whatever you have here, it's going to impact the balance of sales. Where's sales? It's going to impact this balance here. It's now 0, right? Because here is a credit balance. But when you close it, you debit it, so it's going to be 0, right? And the new trial balance, called the post-closing trial balance, will have this sales account that will be 0. But since it's 0, you may not need it. Well, actually, you don't need it if it's 0. It's blank. So when you go here and you see sales, it's not available for you because it's 0. Okay, what about these cash, accounts receivable? Were these impacted by the closing entries? Well, let's go back to the closing entries. Here's the closing entries, and all of these accounts that you had booked it to. Did any of these have accounts receivable? Any of these have merchandise inventory? No. If it's not, then it should be the same balance that you had before. And where was the balance that you had before? Comes from the adjusted trial balance in project part 2. Okay, so here's accounts receivable, here's merchandise inventory. Should be the same. Prepaid insurance, same balance that you carry over to the post-closing trial balance. Your capital, watch out, that will not be the same. Why? Because here you would have to post it to it, right? All right. Now, that's a lot of information, a lot of tips and hints. Please take your time, get it done by the due date. And any questions, feel free to email me, call my office phone number, get in touch with me. All right? Take care.